Go ahead and open the TradingView.com. First, we need to add exponential moving average to our chart. Head over to the Indicators tab and search for moving average ribbon. For the important settings, we're going to go into the ribbon settings and change it to exactly what we need. We're only going to use 3 lines and they all have to be exponential moving averages or EMAs. So make sure all 3 lines are set to EMAs. We're going to use the length 50 for all of them, but here's where we get specific. The first EMA should be calculated using the closing price of the candlesticks. The second EMA will also use the length of 50, but will set its calculation method to high price. And finally, the third EMA, length 50, is calculated by the low price. Now go ahead and pick a brighter color for these, like white, so they're easy to see on your chart. Alright, we're done with the EMA ribbon settings. From now on, we'll just call this cluster of 3 lines the ribbon. The most traders rely on moving averages based on the crossing idea. You know, price crosses up, you buy, price crosses down, you sell. Here's the hard truth. 90% of those traders lose money. Look at this example on the Bitcoin 15-minute chart. Price crosses the ribbon down, signaling a sell. A trader enters short, but bam, price snaps right back up and hits their stop loss. These false signals are everywhere because most traders have no idea about the true market direction or the market underlying force. But that confusion ends right now. In this video, we're going to solve this using the easiest way possible. And I'm even gonna give you a price action idea that makes this plan work well even when the market is choppy or messy, where most systems fail. First, let's introduce our trend filter. It's a simple, very accurate, free tool on TradingView called the Swing Arm ATR Trend Indicator. Go back to the indicators. Type in Swing Arm ATR Trend Indicator and add this one to the chart. But wait, the basic settings are wrong. We need special changes. Open the swing arm settings and change the ATR period to 6 and then change the ATR factor to 18. To clean up our chart, go to the Style tab and uncheck everything except for the very last option, Plot Background. This leaves us with a clean red and green band at the bottom or at the top of the price. Look at this. Green means uptrend or buyers are strong, and red means downtrend or sellers are strong. We only take buy signals when the band is green and only take sell signals when it's red. Let's see this trend filter in action. Take a look at this Bitcoin chart. Here, the price candles crosses the EMA ribbon downward. To the average traders, that looks like a sell signal. But let's check our filter. The swing arm band is clearly green, meaning an uptrend. Therefore, we block this losing sell signal. We do not enter a trade. We just avoid getting a stop down. Here's another example. We have multiple upward crossing, which usually signal a buy. But look at the swing arm band. It's red. The trend is down. All those buy signals are immediately ignored. No losing trades here. Now if you think that's the whole plan, you're wrong. You will lose if you only use these two tools without a price action idea. But don't worry, this is going to be super simple. Let's keep going. First, the bias. The price action is below the red swing arm band, so the trend is confirmed down. We only look for sell signals. As we move along, the price action crosses the EMA ribbon down. That's our first clue, but it's not the trigger. We must mark the most recent swing low. This area acts like a support. If the price fails to break below the swing low, like it does in this first instance, it means no break, no trade, no entry. We simply wait and move on. We wait for the price action to move back above the ribbon and then move below it again, forming a new, more recent swing low level. This time, the price action has the power to break below that level. That's our trigger. We open a short position right there. For your stop loss, place it just above the most recent swing high and set your target to a minimum of 1 to 1.5 times your risk. That's a 1.5 risk reward ratio. Let's keep moving. Just ahead, we see a move toward the ribbon, but the price never actually crosses back above it completely. Remember the rule, if we have no crossing, we have no setup and therefore no trading opportunity. Let's keep moving. Just ahead, keep following the price action. The price actions move back above the EMA ribbon, so we mark the most recent swing low, but look closely. The price action couldn't break clearly below it. Just like before, no break, no trade. You avoid a losing position because you're following the rule exactly. And here's a key change. The price candles move above the swing arm band and it changes to green. So the trend is now up. This means we only look for buy signals. The price pulled back below the EMA ribbon for a buy. We draw the most recent swing high as our resistance. Since the price action wasn't able to break above it as a sign of going up, we do not get a trigger, no trade opportunity. The system protects you from bad signals. Now the trend changes back to down. The swing arm band is red again. The price action pulled back above the EMA ribbon, so we marked the most recent swing low. However, there was no breaking below it, so it fails to trigger a sell signal. We remain patient. We keep moving in a downtrend. The price pulls back above the EMA ribbon again, giving us a new most recent swing low level. This time the price action breaks below it. Triggered. This is your second high probability sell signal. You see how simple it is? Check the trend, wait for the cross, and confirm with the price action break. Listen up. This is the final crucial part. I told you we use a 1 to 1.5 risk to reward ratio because it's proven, but traders still make one huge money mistake that guarantees they lose all their money. Even if they're right most of the time, it's the single factor error. I've outlined exactly how to fix that profit killer mistake and make sure you properly size your trades in the video you see on your screen right now. If you risk another dollar without understanding this crucial step, you're seeing yourself up to fail. Click it now. Happy trading.